Good evening, comrades. Today, as I promised, we are going to do a practical example of tax calculation. We promised this last week when the minister announced the new tax rates and their implications on our pay slips. So we decided to have it done thoroughly today for us to see how the new tax regime will affect our earnings. As you might recall, comrades, on 16th of this month, 16th September, the minister gave a gazette, the gazetted new tax tables, which we call in legal language the Income Tax Act Amendment of 2024. Every year, the minister brings estimates of expenditure, which is what we call the budget, to Parliament for approval. And once the budget is approved, there's a promulgation which is done, which in layman's terms is the approval of the budget. And it is now promulgated, which is published in the government gazette. So that is now the position where we are. So it is called the Income Tax Amendment Act of 2024. Right. What does this have to do with us? As income earners, we pay income tax, which is called pay as you earn. Pay as you earn is a form of direct tax. A direct tax is tax that is levied, collected on your income, right? On your income earned from employment. So, the minister has said employers should pay back the income, the pay as you earn, which is the income tax, which was over deducted. Now people want to know how was this deduction, how was this an over deduction in the first place? It was an over deduction because the budget started on 1 March 2024. The new tax rates were supposed to come into effect on 1 March 2024. But as I explained before, it is a process. When the minister gave a presentation of the budget in Parliament in February, he did not at that time have the approval of the budget because it's a process. So when he presented the budget, he went on to say in May, the budget is not yet approved. And that approval was only done later in September. So up to August, it means employers were still deducting tax based on all the tax rates. And because of that, the tax that was deducted was overstated because of the change in tax brackets. Right. What in the previous budget, the minimum the tax-free threshold was 50,000 Namibian dollars, which means if a person earned 50,000 Namibian dollars for the whole year, from 1 March of the previous year to 28 February of the current year, he would not be taxed. If you make your calculations, that translates to something like 4,800, I think, there per month. That person would not be taxed. So that tax-free threshold has now been increased from 50,000 per annum to 100,000. What this means is that if a person is earning 100,000 per annum, he should not be taxed. If he was taxed for that year, he will get the refund for the pay as you earn that was deducted on that 100,000. So to put it in a breakdown, 100,000 translates to $8,333 per month. So if you are earning $8,333 per month, you are no longer taxable. Now, this is where the refund will come into play, because from 1 March of this year to 31st August this year, people were still being taxed on what? On 4,800 Namibian dollars, which has now been increased to $8,333. So it means the amount that was taxed on that amount, which was less than 8,300, is now the money that is refundable to employees. Before I go into the practical example, I just want to explain how this refund will work out. If you are still employed by your employer that was employing you from 1 March of this year to date, it means that employer has been taxing you and remitting the pay as you earn, or paying the pay as you earn that was deducted to NAMRA. That is the money, the tax that NAMRA is now saying employers should pay back you, the one who was over deducted. So it only applies now if you are still employed by that same employer. They can refund you because you are still their employee. But if you are no longer working for that employer, the employer has already remitted that tax to NAMRA, so they cannot refund you. It means in such situation, you have to wait until the end of the tax year, which is 28th February 2025, next year. And when you submit your individual tax assessment for the whole year, then NAMRA will work out and pay you back the tax that was over deducted. So that is the challenge for those who are no longer employed by their previous employers. And I would want to weigh in or to explain the advantage of getting a refund from your employer as the minister has directed. The refund will be for 6 months, from 1 March 2024 to 31st of August 2024. It means you just get your refund direct from the employer without having to go through the process of NAMRA's refund process. NAMRA does not just give money back like sweets, as it were. If you are to get a refund, it must be audited first. So even if it was your money that was over deducted, for you to get it back, NAMRA's process says any refund should be audited. It has to go through audit process. Everything is submitted. All your tax returns are submitted. Penalties are waived out for late submissions and all those things. If you were submitting late, there are penalties. If the incentive scheme has ended by 31 October, it means there are still penalties on your account. It may affect your refund when it comes to February next year, because there's an incentive scheme that is running now up to end of 31st of October, where penalties and interest are waived. It means they are written off. But if that incentive scheme ends, and maybe you were submitting your returns late for that income tax, pay as you earn should be submitted by 30 June of every year. Maybe you submit it later by 31 July. It means there are penalties on that account. So when your refund comes into play next year in February, March there, when assessments are done, it means you may not get your refund on time. That is why it is important for you to get your refund direct from the employer. There's no such a process of auditing. But others may also want to get their refunds from employer, because NAMRA will give you your amount of refund in full. If it is 5,000, you just get your 5,000 as long as you meet all the conditions. That your returns were submitted on time, there are no penalties, you get your refund in full. But with the employers, they have now been given an option to pay their refunds by way of installments, because the employers, they have complained to say the Ministry of Finance has just caught us with short notice, we don't have the money, it will bankrupt us, we will go insolvent, and all those kind of arguments. So they are allowed you to pay off your refund by way of installments up to next year, maybe June there. So it depends from one company to another, but that is the situation, right? So for now, I will turn over to our example to see how a practical example of how the tax refund will actually be done. I'm going to do a practical example of how this tax refund will work out. We have a hypothetical company that we are going to use called Namibia Logistics, and we have a hypothetical name of an employee called Petrus Lucas. This is just a fictional name. If it matches any one of our comrades, don't take it seriously. It's just an example. So the job title is of Comrade Lucas is a driver, and as you can see from our payslip, we are gonna do the payslip for June 2024. Right. From this payslip, we have on my left benefits and on my right deductions. You can see that Comrade Petrus Lucas is paid a basic salary of 6,000, housing allowance of 1,500, overtime of $1,000 for that month. Then on my right, he was deducted pay as you earn, which is an income tax of $690, social security of $54. His total deduction is $744, and his gross income is $8,500. If we subtract $8,500 minus the total deduction, we get the net pay of $7,756, which is what Mr. Petrus Lucas, our comrade here, was earning from 1 March to 31 August this year. But you will find out maybe in other months he was having overtime which was less than 1,000. So his net salary will decrease or increase based on his what? On his overtime. Right. We want to see how this pay as you earn that the tax that he was taxed there, $690 was arrived at. So I turn over here to this page. Let's see how to calculate that pay as you earn for that month, which was $690. We start with calculating what is called gross remuneration. Gross remuneration is your total earnings for the whole month. Total earnings which is of an income nature. When we say total earnings, we are talking your salary, your commission, your allowances, as long as it is earning that you earned from your employment. We put it into one basket for us to arrive at what you call gross remuneration. So we start with your basic salary. We say 6,000. We multiply it by 12 because we are saying this 6,000 you are earning it for the whole year. Even if you do not work for that company for the whole year, that is how NAMRA calculates. It assumes that you will be employed for the whole year. So we say 6,000 Basic times 12 months, we get $72,000. Housing allowance, the same thing, $1,500 times 12 months, we get $18,000. Then your overtime, $1,000 times 12 months, you get your $12,000. Now someone will say, why is my overtime also by 12? Sometimes I do not have overtime. That is how tax rates are arrived. We assume that that amount of overtime that you have 1 month, it is gonna be the normal overtime for the whole year. Otherwise, if we want to include specific situations for every employee to say he will not work overtime, then NAMRA will not be able to come up with any tax rate, because situations differ for every employee. So that's why we use 12 months for everything. Now, when we get this 102,000, that is our total gross remuneration. Then we subtract what is called exempt income. Exempt income is that part of your income which is not subject to tax. If you have got pension at your employment, pension is not taxable, so it will also be removed. But in our case, this Comrade Petrus has only housing allowance. So we remove 1/3 of the housing allowance, which is 1/3 of 18,000, we get 6,000. We subtract that 6,000, we get 96,000. Then we will remove. Now, this 96,000 means that is the total taxable income. I mean, the total income of this person after removing the exempt amount. Now, when we have this taxable income, this is where we now apply the tax rates now. So from the previous tax tables, I told you that in my description that before the new tax tables were implemented starting this month, the tax-free amount was 50,000. So we remove the 50,000 from your 96,000, which is your taxable amount. We get what? 46,000. So it means Comrade Petrus should only be taxed on $46,000. And if you go to the old tax tables, it was taxed at 18%. So we say 18% of 46,000, we get $8,280 Namibian dollars. So this is the total pay as you earn that Comrade Petrus should have paid for the whole year, isn't it? $8,280. So if you want now to find what is the tax that should be charged to him per month, we divide 8,280 divided by 12, we get this $690. That is the pay as you earn that you saw in his pay slip here, which was pay as you earn of $690. I hope these explanations clarify our deductions for Comrade Petrus. Then the Social Security, as you might also know, Social Security is charged this $54. We got it. Social Security is equals 0.09% of his basic, which is 0.09. I mean, this is 0.09% of 6,000, right? You get your $54, because that 0.09% is the same as saying 9 over 1,000 times 6,000. This one. This is where you get your 54. That Social Security amount. Now, having said that, let's see now how this $690 tax that was deducted, is it gonna be the same tax when we apply the new tax tables that were implemented from 1 March? The new tax tables that the minister has now said 100,000 is no longer taxable. Let's see now. If we apply the new tax rates, the new tax rate says, the new tax rate states that 100,000 Namibian dollars is now tax-free. So our calculation is as follows. When we say 100,000 is now tax-free, we mean to say per annum. So per month, it means 100,000 Namibian dollars divided by 12 months. You get your 8,333 Namibian dollars. If you are earning 8,333 Namibian dollars every month, that amount should not be taxed. That is in simple terms. But if you are earning 8,333 Namibian dollars and you do overtime for that month of $1,000, you get your trips amount for overtime, $1,000. It means that extra $1,000 that you earned is the only amount that will be taxed. Right.
Comrades,
Let's
let's
now
first move now
apply
to
Comrade Petrus
the part of
to see current
refund,
tax
which
rates
is
and see
essentially
how much he will be
the
refunded.
essential part of this video. Now, we want to apply the new tax rates, which the minister have promulgated and has been gazetted by the parliament. Now, according to the amendment, Income Tax Amendment Act of 2024, these taxes are effective as from 1 March 2024, which is the beginning of this tax year that we are currently in, which runs until next year, February 28th, 2025. So, how do we calculate the refund? We calculate the refund in the normal way that we were using the old tax rates. So we calculate our basic salary for the whole year. 12 months times 6,000, which is 72,000. Housing allowance, $1,500 times 12 months, 18,000 Namibian dollars. Overtime, same thing, 1,000 Namibian dollars times 12 months, 12,000 Namibian dollars. We always use annual figures when we are calculating tax. Then we reduce it to what? To monthly tax. That's how the system works. You always estimate annual income, then annual tax, then monthly tax. That's how it works. So if we get that 102,000 Namibian dollars, then we say less exempt income. Exempt income is that income which is not subject to tax. For example, your food money, the pension that you contribute to GIPF or Alexander Forbes, is not taxed until such time you are retired or you take your gratuity then. So in our case, we have only housing allowance, which is supposed to be exempt, and it's only 1/3 of the housing allowance which is exempt. So we say 1/3 of housing allowance, 1/3 of 18,000, we get 6,000. We subtract the 6,000 from the 102,000 income that we got above, then we get net of 96,000 Namibian dollars. Now we go to the tables. Is 96,000 below or above 100,000 Namibian dollars? It is below 100,000 Namibian dollars. So it is not taxable. So if it is not taxable, it means Comrade Petrus was not supposed to pay that $690 that he was paying from 1 March to 31 August 2024 monthly. So to get his refund, we say 6 months, March to August, multiplied by 690 Namibian dollars, we get 4,140 Namibian dollars. That is the total refund which is now payable back to Comrade Petrus. So that one is now subject to the company how it will pay you. The company have been given the green light to pay in installments because they have raised concern to say we cannot pay the whole amount at once. We are facing financial problems, liquidity challenges. Some are even facing liquidation. So the minister agreed that they can pay by installments. So they will pay
That 4,140, some can pay in full, some can pay starting this October, your installments to pay you back the refunds. So from 1 September 2024, the payroll administrators should now apply the new tax rates. It means Comrade Petrus will no longer be taxed on that, on his monthly salary, because it falls below 100,000 per annum, which translates to $8,333 per month. But it should be noted that if in any month Comrade Petrus works overtime, let's take for example, if he works overtime of $1,667, it means in that month, if we add 1,667 to what he's earning, suppose he's earning that 8,333 per month, we add that, he is now earning 10,000. So we say the amount that is above $8,333, that extra 1,667 is now taxable at 18%. So the more you earn above the 100,000 threshold, the higher the tax rate will be. It will depend on how much you earn above the 100,000. If you go up to 300,000, the tax rate will also rise up. It will now be at 25%. That is 300,000 per annum. And it will increase your tax rate. But as long as it is below 100,000 or $8,333 per month, you will not be taxed. I thank you for your time. This is Comrade AT signing out. If you have any questions, forward them to Comrade Joe. Thank you once more.